What we're going to have a look at today is looking at missed opportunities and how to deal with it and what to do next. Often what happens when people miss opportunities is they will then try and still play the same trade, if you see what I mean. So rather than just say to themselves, okay, well that was a chance and now the chance is gone, there will be an attempt at still playing the same thing. And what that's not doing is that's not taking account of the information at hand. What it's doing is it's saying, right, I want to play this trade. I didn't get in on the first move. I will take the trade on. Rather than looking at the trade that's happened and asking yourself what this tells you. So I'm going to show you a couple of different examples that came up yesterday. One in the S&P, and these are examples that have come from traders who I've been speaking to. Some of the guys on the career course, some of the guys who are trading live. And both have looked at similar type things. What's really important is if you miss an opportunity, what you're not trying to do is debrief the opportunity during the day. What you're not trying to do is go through it and say, okay, well, how could I have executed this trade better? What were the signs that give me the opportunity to take this trade? What did I miss? Could I have got into this trade, or is this a move that ultimately was not there to be taken on? That's for your debrief. You're trying to dissect that trade and learn something from it, even whether you took it or not, is a debrief thing. You want to be looking at where you could enter, how the move develops, how the move continues, what happens when it reaches target. That's a side thing. In the moment, what you're looking at is that move that you were perhaps looking at that you didn't get on. You then need to say, okay, well, what information have I gained from that move? What information have I got to now play the next part of this move? Because is the move now what I thought it was, or is it something different? So the bit of the opportunity, or the opportunity you missed, you need to look at and ask yourself, how did this play out? Did it do it as expected? If it did, then this may well still suggest continuation. And in the example that I'll show you in Eurostoxx, the expectation from this trader was that there would be continuation, that it would be a trending type day. Now, some of the information gained on the early part of the trade that was missed was that actually this doesn't look like a continuation trade and more looks like a liquidation type move. Very similar to what we saw today. That extremely fast drop in Eurostoxx, in DAX, in S&P, that extremely fast drop that we saw earlier, again, did not look like the beginning of a trending type move. Instead, when we dropped in Eurostoxx pretty much in a straight line from around about 30s all the way down to all the way down to around about the mid 90s, this is saying to you this is a liquidation type move. Eurostoxx doesn't normally straight line 40 ticks or 35 ticks. So you're then expecting pullback. You're expecting that for you to play that trade, if you've missed the early momentum type move, playing momentum is not the way to go about it. You want to now be playing pullback. Also, what that then helps you do is by taking the information on, helps you ask what's the next opportunity going to look like and how are you going to play that? So ask yourself, how are people now positioned on this trade? Is there still a continuation in it, or could the move be over? Because this then allows you to manage your targets on the trade, to manage your expectations of how much more you can really get out of this. So I'll go and show you a couple of examples and I'll talk through what you learn from the move and then what you can do about it. Right, so first up, idea here, and this was a trader looking at the S&P session and looking at a caught in the hole. So what they were looking at is, with this close up in the S&P, up around the highs, that this is what you call a caught in the hole trade. Late drive up into the close just here. So really the main trade in the S&P at that point was down pretty much below 32.20. Charge up then at the end of day towards 30. So this looks like a move that can reverse. Now coming into the pit session, you'd be looking for that, but the overnight session does it for you and reverses this move. So you have an opportunity to play that, to play the break either very early on in the overnight, just back down towards the main area of trade to around about 19s, 17s area. And this is what we get. Once then in the overnight session we break down below 17, you've now got scope down towards 04, the VPOC, and then potentially down towards the low at 94. So from the pit session. Now what you have to think about here is a lot of this movement here is going to be long positions getting rushed out in the overnight session, but also shorts chasing this in the overnight, so weaker positioning. So when playing the next leg of the move, the continuation, the selling through 03.5, you have to ask yourself how much selling is really going to be left in this. We're already now a long way back from previous highs. In the overnight session, can this really continue? And so your tolerance to stay in below 94 should be low. Even if you are looking lower than that, you've got to sort of accept that this is an overnight move that is more liquidation like. Very, very fast, very straight line. Not a great deal of volume done. So this first part down is then suggesting that you may get that extra push, but don't keep on holding on to it. It's that last leg down, basically, on that liquidation. Come the pit session then, up here, still pit session opens and you're below the VPOC. Fine, we can see this fall. We hold and we start to drop. Now, from here, because we've seen this liquidation, and now you've got a lot of the overnight session short. Look where all the volume is in the overnight session. A lot of people are now short overnight. So you effectively now have the same trade back up. What is then needed is the break of lows. And so the information you've got, because of that liquidation down and building a position towards the low, is suggesting to you that this probably doesn't have that much continuation in it. And to continue, you need to see the break of lows. When that doesn't come, again, those 94s from the previous pit session become key. Back above them, you're out. Give up on the trade, and then these shorts get caught out and take us back up through the range, back towards the top of value from that pit session. The Eurostoxx one as well yesterday. What we had yesterday was, for some traders, an expectation of trend. Now, I always feel that it's very difficult to suggest a trend day before it's happened. What you're looking for is clues to trend. Did we get any clues to this? And I'd suggest again, perhaps not, particularly by the time we get to here. This is yesterday, as was the S&P. So whilst there was a look potentially for trend, you need to see the signs of trend in this. And I don't think there were. Again, this looks like a liquidation type move. You've had a consolidated day at the top after a strong move higher. Consolidation, people are going to build longs in here. Once you break 41, so that's coming all the way down here, you then get this small stall and then fast drop again. So this is another fast move in Eurostoxx, around about 50 ticks to the downside. This doesn't have the hallmarks of trend. Trending days will move down, consolidate, down, consolidate, down, consolidate. This is pretty much straight lined, nearly 100 ticks. That's more a sign of liquidation, particularly as it's come on the back of a balanced day and a break of a previous reference point of 41. As soon as this breaks, the move picks up pace straight down to the next area of support at 87. That would indicate that this is more of a liquidation move. So if you're looking for trend, the possibility of continuation here is now not that likely. You get a pullback here which comes up towards 20. And this does, not because of 20s here by any stretch of the imagination, you've got this particular low volume point just here. And that could well be your reference point for a second wave down. Now, once this happens, this is game over. This is saying to you that failure to break 87, this is not going to be a trend day anymore. This needed, with a trend day, when you break a low, it will usually stay below it. We're not seeing that. So you get through 87 and we come straight back above. This very quickly is saying no trend. And so then, wherever you're selling on pullbacks, you're looking then for rotation within this area. So your expectations are more limited on this trade because of the information you've got. That whilst it's put in a decent sized move, it's not trend like, it's liquidation like. And so therefore, you don't want to be hanging around on it. And therefore it changes your view as to what's going on. Your view of what's going on should be more that this is going to be a rotation towards the lows of range because of the way it's dropped. The way Eurostoxx dropped again this morning looked similar. Very, very fast on the drop. That's another sign of liquidation. That anyone buying it for the bounce, which got back above 41 here, as it starts to drop, they're not able to hold on to it, and we then have this fast flush down. But again, it was very fast, small consolidation, or it did actually put in a decent consolidation, and the final leg was very fast again. And now we've actually fully bounced this back. Eurostoxx, if I bring your profile in just now, is looking more trend-like today than it was yesterday. Because of the fact we've done volume here, we've then done more, oh sorry, that's the DAX one, but that's looking the same. I'll bring your Stoxx in, just for clarity. Looking more trend-like, we put volume in above the VPOC, we sweep it and put volume in around about 03. I'll just split this up a little bit. Put volume in from 97 up to 13, break lower, but now we're back into this zone. Again, this is suggesting this is no longer looking trend-like and looking more like a double distribution, semi-P-shaped type day. So again, the possibility of trend has diminished here. So it's all about taking that information forward, that whilst you may have been looking for trend, when it doesn't play out, you have to say to yourself, this is no longer a trend day. And we're not likely to get this continuation. When I say it doesn't play out, the direction and size of move does. The nature of the move does not suggest you're going to get much more though. So from a profile point of view, this is what the profile looked like at the end of the day. But the majority of this move, all the way down in fact, was done in the first 2 hours. After that, it's then just balance. And so particularly once you've had this second shot down, if you're looking for trend, the nature of this move has suggested that this is unlikely now that you've had that break lower. So whilst you can have a target down here, I'd suggest this is unlikely. And to be staying in on this, you're going to need a stop all the way up here. It's a justified stop to play the target, but the nature of the move is suggesting that it's unlikely to actually play out. So make sure if you miss an opportunity, and I think the missed opportunity here is to get on the break of 41 or the pullback to 41 on the initial break for again another very fast move down. If you're in on the very fast move down, that's suggesting to you this is probably not going to keep going. And then you can come out on the previous day's lows at 87 perhaps, or at least when it doesn't break them, come out around there. And particularly then when it has a second shot, you should be thinking this is rotational. So I'd actually be looking, perhaps this sell should be coming higher back towards this area up here where the bounce came from and where the low volume is. So that would perhaps be an area to be thinking about here and improving trade on that whole idea of what have you learned from the original move. Does it stack up to what you're originally expecting? And if it does, then you've got trades accordingly. If not, what's that now telling you?